I sure hope you're ready because we have a big week coming up in the stock market, a ton of earnings reports this week, and we have 10 to go over in this video. I want to break down the 10 stocks I'm watching the closest, earnings estimates, revenue, all that good stuff. Of course, what I'm looking to do, the charts as well. But before we dive into it, hit the like button. Do not forget to subscribe, follow along for more content, and join the free email stock newsletter. I send out my top stocks weekly right to your email, and that is linked down below. And with that being said, guys, cheers, take a sip of your coffee, and let's dive into it. It's gonna be a long video, guys, so let's get into it. And before we dive into the 10 stocks, let me show you quickly how the indexes have been performing heading into this week. So I'm sure you all know we've been seeing a pretty nice move to the upside finally here across the board. We had SPY over the last couple of days go from 508. I think we started off last week at 508. We closed at 508 last Monday, and we went all the way up to 551. So last week alone, SPY went up 8%, and QQQ went up around, let's see, off the low from Monday, we went up around 10-11%. So we had a big bounce back week last week, and it's actually changing the overall direction of the stock market slowly. You know, it's not like it's a little relief rally within the overall downtrend. We're actually now legitimately starting to break out. Not fully, of course, but we're starting to get signs of it. We're above the moving averages for the first time in about 2 months here on QQQ and on SPY on the 4-hour chart, which is a great sign overall for a reversal. Again, we're not fully there yet, but man, we're looking a lot better than we were about 2 weeks ago. Let's just say that. So we're going in the right direction on these indexes. Very big move last week, and we're up even more off the lows. I mean, look, from 480 to now 551 on SPY. We're up around 15% off that low earlier in April this month, and QQQ is up around, let's see, from 398 to about 472. It's up 18%. Yeah, big bounce back on the NASDAQ tech-heavy index. What a couple of weeks it's been, and what a crazy month it's been, man. April has been quite the roller coaster ride for the stock market, and hopefully May kind of chills out a little bit. We'll see. I mean, the VIX is already under 30 points right now heading into May in a couple of days. The VIX is actually in the mid-20s, so we're looking pretty good there, but you never know when the VIX will spike back up with the trade war, right? U.S., China, blah, blah, blah. But we're already seeing Trump saying de-escalation is here. There's going to be a deal soon, but will there be? We really don't know. But as of now, stocks are running, VIX is down, gold is selling off, right? Safe haven asset. We're looking pretty good in the stock market. So let me start now with stock number one. And again, we have 10 to go over in this video, so let's get into it. MSFT is number one for this week. You can make a case for Amazon, Apple, Meta, whatever. All these are this week, but this is one that I'm watching very closely. Microsoft, they're reporting earnings, I believe, on Wednesday. They're on Wednesday after the bell, and the stock's trading at $392 per share right now and trading at a multi-week resistance. You can see right here, Microsoft's trading at about $390, $395, which is where we got rejected about 2 weeks ago in the middle of April. Also, end of March, early April, we got hit there. So heading into earnings, guys, on Wednesday, this is the moment of truth spot for Microsoft. And if we're able to get out of here, start breaking 400, this is where a lot of momentum could start building up for the stock. And it would take it out of this bull market or bear market rally territory, dead cat bounce territory, and it would put it in a legitimate breakout spot if we're able to get out of 400. Because the reality is, even though QQQ is starting to reverse, Microsoft It's not fully there yet. I mean, I guess you can argue it's above these moving averages on the 4-hour chart, but we're not really taking out the highs yet from a week or two ago, which I would like to see. And if we're able to do that after earnings, start building momentum above 400, that would be ideal for the bulls. So Microsoft's projecting earnings per share on average here of $3.21 versus $2.94 from last year on revenue of $68.43 billion versus $61.86 billion from last year, up around 10.5% to about 11% year over year is what analysts are seeing revenue to grow at. Not bad, 10-11%. For the size of the company Microsoft is, that's not bad. But again, on the charts, I need to see it break out of 400. Time will tell. Time will tell. But man, kudos to Microsoft for being up around $60 from the lows, about $50-$60. It's up around 16%, not bad, but let's see if it can get out of 400. That's a tough spot. Meta's another one. META. Meta is on Wednesday as well, I believe. Yeah, Wednesday after the bell. So we have Meta and Microsoft on the same day. And this one, well, you can see the Head and Shoulders. We nailed that call out, didn't we? I mean, look at that. Head and Shoulders played out here. And clearly, Meta is up a good chunk off the lows, but still under this 180 SMA. Still at a big spot of resistance on the chart. And let's see, how much are we up on Meta here? About 17-18% off the lows, but again, still within a downtrend here, which needs to break. Not only is 550 a big resistance here on the 180 SMA, or it's the 180 SMA resistance on the 4-hour chart, but also 550 was support for months on the stock. Then we broke through it, obviously making it resistance. So this spot needs to break, man. Forget 635 where my alert's at now. That was from a couple weeks ago. Let me set one now at maybe 555. We'll put my alert here on Meta. So they're expecting EPS of $5.22 versus $4.71 from last year on revenue of $41.35 billion versus, let's see, 36.45 billion last year, up around 13 to 14% year over year is what analysts are predicting here for Meta. Not bad, but for sure their revenue growth has slowed down, at least this quarter they're about to report for compared to last year. I mean, we're used to seeing Meta growing 15, 20+%. Now they're about to grow 13%. Not bad by any means, but it's definitely slowed down from what it used to be. So my alert's at 555. And that makes sense because Meta's growing. They're maturing as a business. Obviously, the growth's not going to be 50% every year, 20, 30% every year even. It's going to end up coming down at 10, 15%, and then ultimately single digits eventually. That's how this works. Companies don't grow 30% forever. That's not the reality. But yeah, 555 is where my alert's at. Watch out for Meta and Microsoft on Wednesday. And we also have Apple. Apple, I believe, is on Thursday, which, that's the 1st, right? Yeah, so on the 1st of May, we have Apple, and Apple is projecting earnings per share of $1.61. Actually, I don't want to say Apple's projecting. The analysts are projecting that $1.61 versus $1.53 from last year on revenue of $94.06 billion versus $90.75 billion from last year, up 3.6%. Year over year projected. Not much, but hey, what do you expect? Apple is one of the biggest companies in the world. They're growing. Days are probably behind them, let's be honest. And until they find that next innovative product, they're probably going to be growing 1 to 3% revenue growth on any given quarter, maybe more, maybe less, depending on how things are looking. But this stock is obviously in the crosshairs with the China-U.S. trade war, although we did get smartphone exemptions a couple weeks ago. That caused the stock to go up here in this, in the midst of this trade war. The stock's up 25% in the last 2 weeks, which is a big move off the lows. But that's primarily because it sold off so aggressively when the trade war kicked off, because we all know a lot of their products are made in China, right? Yeah, they're transitioning manufacturing to India. They're going to bring some here to the U.S., blah, blah, blah. But a lot of it's in China. And when the trade war sparked off, Apple stock got destroyed. It went down 30%, 25% in the span of a week. So that's why we got a nice rebound on it, a sharp rebound because of how much it went down initially. Whereas some of the other names, Microsoft, Meta, I don't think they got hit as much initially early April, but Apple did. And it's still in a downtrending channel. It's not reversing. Don't get it twisted. We're not breaking out yet, but we are up a good chunk, about $40 off the lows, 22%, heading into earnings on Thursday. And I don't know, man, the risk here is, a lot of these stocks are up a good chunk off the lows heading into earnings. If earnings are lackluster, let's say guidance is bad even, we could be setting up for a dump off post earnings. But it all comes down to the numbers and specifically guidance. What is Apple going to guide for the next couple of quarters if they even provide us guidance? You know what I mean? Sometimes, no guidance is better than bad guidance. Let's see what Apple has to say about that. But keep in mind, again, a lot of these stocks are overbought right now heading into earnings. Keep that in mind. It doesn't mean they can't go higher. It just means that earnings have to be pretty good and the overall market has to hold up for these stocks to go higher. You know what I mean? So Amazon is also on Thursday, I believe. Let me double check that. I'm pretty sure. Yes, on Thursday the 5th, or not the 5th, May the 1st. I'm looking at 5-1. So I'm like, oh, May the 5th? No, May the 1st, right? At Amazon, they're projecting earnings per share of $1.36 versus 98 cents. That's what analysts are thinking. 98 cents from last year, pretty good. On revenue of $155 billion versus $143 billion from last year, up around 8% year over year. Not bad for Amazon. 8% revenue growth expected, and this stock's not up a ton off the lows. I mean, it's up 15%, not bad, but again, not nearly as much as Apple, being up 23% off the lows. Either way, man, it's not really breaking out fully yet. It's getting there. You're noticing a bit of a double bottom here on Amazon, maybe a double bottom breakout, but I would like to see it really start pushing 200 plus before I say, okay, we're now fully breaking out. But yeah, Amazon, I'm watching closely. And out of these 4 big tech stocks we've covered so far, Amazon's the only one that I own as of now. And honestly, I don't plan on buying Meta or Microsoft or Apple anytime soon. I don't want to have my portfolio be literally all the big tech stocks. That's where I think people go wrong. I'm not saying not to own any big tech stocks, but I don't know. I think owning all of them is kind of stupid, especially if you own an ETF, right? If you have an ETF in your portfolio and you own all the individual tech stocks, it's like, what are you doing? You already own all these stocks in the ETF you have, especially if you have an S&P ETF or QQQ or something. You already own all these. So I don't want to own every single big tech stock, but I do have a couple, I think 2 or 3, right, that I own, and I'm happy with that for now. So Amazon, I'm pumped about. I own it. I would love to see the stock go higher, but hey, maybe it dumps 20%. We don't know. So, of course, do your own research. I'm not a financial advisor. You got to do your own research. So Robinhood, I was so close to buying Robinhood a couple weeks ago, earlier in April, when it was at 28, 30, 32 bucks. I didn't pull the trigger, and now here we are, 50 bucks a share. The stock's up a whopping 60-70% off the lows, and it's pretty much fully breaking out. We're above the moving averages. We're taking out the highs from earlier in April, end of March. We have a golden cross here. This looks great heading into earnings, right? But will earnings ruin the parade? We shall see. They're on Wednesday after the bell. Robinhood's projecting earnings per share of 37 cents versus 24 cents. I keep saying Robinhood, or the company's projecting. The analysts are projecting that. And analysts think they're going to do $917 million on average for revenue versus $618 from last year, up 48%. So yes, Robinhood is a high growth company. Compared to these other ones we've talked about so far, this is growing by far the most. So if they crush earnings, guys, if they guide up on revenue or EPS, whatever it may be, expect this to go higher, at least in my opinion. $50 plus, $55 plus. Who knows where momentum could take this, especially if stocks in general keep on strolling up, which is a possibility, right? As the trade tensions are slowly de-escalating, at least that's what we're hearing, right? Although China's like, oh, we're not negotiating with the U.S. Trump's saying, oh, yes, we are negotiating with China. So we don't know exactly what's going on. But as of now, things are cooling off a bit. VIX is down. Stocks are up. So if that continues, plus good earnings out of Robinhood, yeah, maybe $50 plus could be coming. So I like the way things are setting up here on Robinhood, ticker symbol HOOD. We also have Visa this upcoming week, which honestly hasn't done that bad recently. I mean, Visa's down about $30 from the highs earlier in March. I guess we did tank all the way down to $285. We are up around 18% off that low, and we're not really breaking out on Visa, still technically making lower highs, lower lows, but we'll see earnings. Again, earnings are this week on the 29th. That's on Tuesday after the bell. Visa analysts are projecting earnings per share of $2.68 versus $2.51 from last year on revenue of $9.55 billion versus $8.78 billion last year, up 8.8% year over year. Not bad, not bad. 9% revenue growth. Not bad. You know, Visa's obviously the insane growth days are behind them. They've been behind Visa, but they're still growing at a 7, 8, 9, 10% clip. At least that's what analysts are projecting. That's not too bad. So I would like to see a breakout of, let's say, 340 at least. I'll set my alert at 340 for now. Mark is at or above. And again, earnings are on Tuesday after the bell. We'll see how they look. And by the way, before we continue on here, we have 4 more stocks. Make sure to hit the like button, first of all. Subscribe, follow along for more content, and join the free email stock newsletter if you haven't. I send out my top stocks right to your email every single week for free. That's linked down below. And if you want to check out what I'm doing in my portfolio, my trades, my investments, my options moves, that's on Patreon. That is linked down below as well. Make sure you guys join the Patreon. So PayPal, PYPL, they're this week, I believe, on Wednesday as well. No, they're on Tuesday in the morning. So they're pretty soon here. Tuesday in the morning, we're getting PayPal's earnings, and they're projecting, well, analysts are, here we go again, EPS of $1.16 versus $1.08 from last year on revenue of $7.84 billion versus $7.7 billion from last year, up 1.8% year over year. So PayPal, I'll be honest, I'm not a big fan of this as an investment. I used to own it like 4 or 5 years ago. I sold the stock, thank God, for a nice profit. And man, it's been downhill since. I think the competition around PayPal has been surging. I know it has. You got so much competition, and the growth is just gone. The growth is gone, man. It's flat pretty much, up 1-2% year over year. Big deal. You know, the growth days for PayPal are behind them, and the stock's pretty much at the same level it was at 8 years ago. Yes, 8 years ago. And people look at PayPal and they're like, oh my God, it's a buy, it's a value stock. And it's kind of in the same predicament in my eyes as a Nike, as a Disney. You know what I mean? There's a lot bad going on with the company. Well, Disney has turned things around more than Nike. I think Nike's they're struggling the most out of the three I just mentioned: Nike, PayPal, Disney. But PayPal, Nike, Disney, they're all in the same umbrella as a turnaround play, right? People would say, oh, PayPal, Disney, Nike, these are turnaround stocks. They have great brands. They're going to be okay. But I don't think that's how it works, right? I don't think it's going to be that easy. Let's just say that. I think this stock, this company, if it's able to get things rolling again, get back on track, it's going to take years. Especially Nike, which Nike's not this week earnings-wise, so I'm not going to dog Nike too much. But, man, I think PayPal's in that same category where things are not looking pretty. People are clinging on to the idea of what PayPal used to be, and they're projecting that into the future, and I just don't think we're going to get back there. I still use PayPal. I love the product. I don't use it nearly as much as I used to be honest, but it's a decent product, but I don't think I just don't think they're gonna thrive like a lot of people do. I think this could be a value trap. I really do think it's a value trap. It's a stock I'd avoid personally, but hey, they're reporting earnings this week, so I'm watching them. But keep in mind, last time they reported earnings, the stock was at $95 a share before. The stock then tanked to $77 after earnings, and it's been bleeding ever since. Not ideal, not ideal. So McDonald's is another one which I used to own about 9 months ago. I sold out of it for a quick profit. I bought it, I think, at $250, $255. I sold it just over $300. McDonald's stock has been holding up like no other during these rough times, right, for the stock market, which, again, the stock market might slowly be turning around, but we're still down a lot from all-time highs, a good chunk at least, and McDonald's is really not. McDonald's is holding up very nicely, and they're reporting earnings on, let's see here, guys, what day? On the 1st of May, so they're on Thursday, and analysts have them doing $2.68 EPS versus $2.70 from last year, so pretty flat. Slightly down on EPS year over year. On revenue of, $6.13 billion versus $6.17 billion from last year, down 0.07%. So McDonald's is not growing at all based on this quarter, analysts are thinking, and EPS is not growing, but the stock is holding tight. And why is that? Well, because this company, this stock, is very defensive, number one, and number two, it's great during recessionary times. You know what I mean? People are still going to go to McDonald's no matter what, right? Recession, good times, bad times, great times, whatever. People are still going to go to McDonald's, and it's more of a real estate company. Yes, they sell food, burgers, fries, chicken nuggets, chicken sandwiches, right? You got to love McDonald's. It's nostalgic for a lot of us, right? Myself included. But it's really a real estate company. They have like 35,000 locations worldwide. At least that's what they had last I checked when I did research on them about a year ago. It might be more now. But yeah, this is a stable company, right? Stable revenue, stable profit, stable dividend, and companies like that, defensive companies, right, they do well during rough times in the stock market. We've seen this with stocks like Coca-Cola. That's another great example, and the list goes on. So keep your eyes on McDonald's. MasterCard as well. Keep your eyes peeled on MasterCard, guys. This company is on, let's see, the 1st, so they're on Thursday in the morning, and they're projecting, analysts are, EPS of $3.57 versus $3.31 from last year on revenue of $7.13 billion versus $6.35 billion last year, up 12% year over year. Not bad for MasterCard. It's trading above the moving averages on the 4-hour chart, which is good here in the short term. And we do have a head and shoulders. Keep that in mind. I'm noticing that on the 4-hour, not the best sign, but we'll see if we can continue to progress above the mid 500s on the stock price here. And if so, the head and shoulders is pretty much out the window. But keep your eyes on MasterCard this week. And last but not least, guys, hit the like button if you stuck till the end. Leave me a comment, say stuck till the end. I appreciate you guys. We have Snapchat, which I honestly, if I can say I hate any stock, it's Snapchat. This stock freaking sucks. I don't understand how anybody invests in Snapchat. It literally has been in the $8 to $15 window for years now. And I mean, we had a huge run during COVID. Shortly thereafter, where a lot of stocks got in a bubble, this thing got to $83, which is unbelievable in my opinion. I can't even believe it, honestly. And since then, we're down like 85, 90%, and we're back to where we were now well before the pandemic. We're back to where we were in 2017, 18, 19. And man, I bet you a lot of people made a lot of money, hundreds of percent on this stock if they sold during 2020, 2021. I hope you sold it. If you're watching this video and you had Snapchat, I hope you sold it, because it's never getting back there. There's no way. It's just never going to get back to $80 a share. I highly doubt it. Honestly, I don't think it's ever going to get back to $20, $30 a share. It's like this company, this stock struggles to really figure out how to make consistent money, how to grow the user base, and really just maximize the users and really grow the revenue per user, right? That's the big struggle that Snapchat has. They have the younger demographic, yes, they do, but they just can't figure out how to really just build a story around the company and just grow the freaking stock price, and grow the earnings substantially. Same with the revenue. I mean, they are projecting a whopping 4 cents of EPS, analysts are, versus 3 cents from last year. I mean, that's not going to move the needle for the stock. And revenue has slowly started to not deteriorate, but it's not growing nearly as much as what we saw. Right? Snapchat is projecting revenue of $1.35 billion versus $1.19 billion from last year on revenue, which is up rather 12.6%. Their revenue, guys, is growing 13% year over year. It's not good. It used to be a lot more than that, and the stock price was pretty much the same level or maybe slightly higher when it was growing a lot more revenue-wise. So it's like, what's going to get this stock price moving? I don't know. Maybe if they get bought out. Maybe if they launch a new product. I don't even know. I don't even use Snapchat anymore, man. I just think it's a cesspool. It's just a bunch of... I've covered this before about Snapchat. It's just a bunch of like 18 to 25-year-olds on there posting a bunch of stories repetitively. I think the way Snapchat creators make a lot of money is if they post like 50 stories and just keep posting a bunch of BS. There's just no value on Snapchat. That's the big problem. I guess it depends on the creators that are on there, but at least when you're on TikTok, when you're on Instagram, right, there's some sort of value there, at least based on what I'm seeing, right? But Snapchat is just a bunch of degeneracy. We'll leave it at that. We're not going to get too deep into it. It's just a bunch of degenerates on Snapchat, man. And they just can't figure it out how to make real money and grow the business. And it's clear in the stock price, right? And we'll leave it at that. So what do you guys think? Let me know your thoughts in the comments. Bit of a longer video, about 30 minutes. I can't remember the last time I made a video this long, but let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Follow along for more content. And with that being said, cheers. I'll catch you all in the next one.